When traders talk about macro in Forex, they're talking about the big picture forces that move currencies. And instead of staring at short term charts or indicators, macro trading looks at economics, politics, and global events. Think about interest rates, right? When the Federal Reserve raises interest rates, the US dollar usually strengthens because investors want higher returns. On the flip side, if the European Central Bank signals cuts, the euro may weaken. Now, remember, it may not weaken at the decision itself. A lot of that weakening, happens before the decision, and then there's carry through after the decision in the months to follow. But it does tend to weaken. Macro traders anticipate these moves by following central banks very, very closely. Another big driver is economic data. Reports like inflation, GDP, jobs numbers, they tell the state of the country's health. Strong data can lift a currency, weak numbers can sink it. Then there's geopolitics. Elections, wars, trade disputes, Donald Trump, if you ever heard of him, these can all swing currencies really, really quickly. Uncertainty around Brexit, uncertainty around trade deals can drive the dollar up, can drive the British pound lower, and can drive everything sideways at times. So macro in Forex isn't about technical setups. It's about reading the world. And successful macro traders connect the dots around economies, central banks, and politics to forecast where the currencies are headed. In short, macro trading is trading the story behind the charts, having a reason to take a trade. Now, professional traders are often the ones who have a better understanding of macro fundamental analysis because oftentimes they have access to professional tools. So I want to show you a couple of their advantages if we go to the screens. Professional traders look at an economic calendar, but they get extra information. So they're going to have the full range of analysts' expectations, which allows them to spot quickly and see if this news event like CPI has actually shocked the market. And that can lead to a good trade, right? They have access to Commitment of Traders report, but one that's organized in a way that's really helpful. So you can see here the long short sentiment of hedge funds on gold itself. They also look at other markets like the options market in a process called intermarket analysis, and they can see turning points like on the pound dollar. Okay, here's a spot where if the pound is falling, these are levels to buy. Here's levels to sell if the pound is rising, right? They also have access to an actual interest rate tracker that shows them the exact probabilities, in this case, of a cut from the Fed on September 17th. So all of these fundamental tools, you can, provide a real advantage to professional traders. And they're using these all the time. If you want to pick these up, just go to financialsource.co and you can grab them today.